to know that every time I get ready to get on one of these calls, I smile because I am so excited to be part of a team that's seeking freedom and a team that is wise enough to follow an outstanding leader like Tanya McHale, someone who has been in this entrepreneurial space for over 2 decades, someone who is intelligent and wise enough to understand the importance of multiple streams of income. And there are so many concepts that I borrow from her. And I like that about our relationship, that we borrow concepts from each other. They say that imitation is the sincerest form of flattery. Well, I am absolutely honored to continue to steal material from this great leader who's been featured in Success magazines more times than I have children. So with that in mind, I am so happy to be back on this Zoom call. I am picking and dropping off children right now. So if my sound or my reception becomes an issue, please immediately let me know. So welcome to a talk with the economic equalizer, the financial artist formerly known as the finance doctor. And I recall very well that the last time we were together, that a question was asked about taxes. And I am ready to answer that question. But prior to doing that, I want to say a few things about some of the things that I heard talked about over the last 60 minutes. First of all, I just want to say that I really appreciate the sentiment of us doing what we need to do to set the intention for 2023. And I really appreciate those testimonies that were provided, the importance of making sure that we understand repetition. And I love the statement that was made that when we listen to something again, it's not because we don't know it, it's because we want to know it to a higher degree. Absolutely, we want to master it. So that is such a good lesson. And I like to say that although I'm constantly telling people the importance of repetition, I spent most of my adult life looking at it just the opposite, making sure that I would only look at something once on purpose, because my rationale was then I would have the opportunity to look at more things. And if you've ever followed Kevin Trudeau, who is a great avatar in this space, he talks about the fact that Bruce Lee would say he was never afraid of the opponent that had 1,000 moves, but he was afraid of the opponent that had one move that he practiced 1,000 times. So we put ourselves in a position of strength when we master something by utilizing repetition. This is something I really only learned over the last 10 years. And my ability to be able to master information has been greatly multiplied since I learned the power of repetition. So that's just one of the many great testimonies that were made. But I just wanted to give my shout out to those things that were said. Now, the question that was asked was, as traders, how do we make sure that we count our taxes or that we file our taxes correctly? That question's easy. That answer is easy. But what I want to do is go a little bit deeper before I answer that question, because I think that we all know and believe how you do one thing is how you do all things. How you do one thing is how you do all things. We want to be excellent in all areas. And over the last 30 years of me being in this space, I've noticed that for some strange reason, we approach taxes differently than we do other areas. And I say for some strange reason, but I know exactly why that is. Why that is because we carry a little bit of intimidation when it comes to the Internal Revenue Service. We carry a little bit of fear by thinking about what could happen if we are in a position where it's the IRS against us. So because we think about it that way and we operate in fear, we deal with taxes differently than everything else. So let me give you an example. I was out of town for 2 weeks. And right before I left, I cash apped my next door neighbor who does lawns. He is an expert. He has one of those riding mowers, and he does a very good job. Now, I am well aware that I could easily do my own lawn. the amount of physical energy that it would take for me to do my own lawn is not that different than the physical energy that I place toward working out on a daily basis. It would be the same. So go do your lawn instead of working out, and the calorie consumption or the ability to exert would be the metabolism required would be the same. But I don't want to do my grass. I'm not interested in having grass all over my shoes. I don't want to have little grass petals on my brow after I go outside and mow my lawn. I want to pay someone else to do it, and that's fine. But this is the part I want you to walk away with. When I came back from being out of town, the first thing I did was look at my lawn and notice how well manicured it was. So although I'm paying someone to do it for me, I'm also observing the results. I'm also observing how it's done. I'm also observing the way it's manicured. But this is not what we do traditionally when it comes to taxes. What we do in taxes is we do this. We hire someone to do it, and we look away. We don't look to see if it's well manicured. We don't look to see the way in which it's done. We simply pass it on to someone else and say, here, do this for me, and we look the other way. So as a result of that, whenever I have a conversation about taxes, I would like to go deeper than just saying, well, here's the answer to your question. I like for people to understand that we have the freedom to A, do it ourselves, or B, if we choose not to do it ourselves, understand what's being done and why it's being done. Yes, I'm going to say it again. When I talk about taxes, I like to empower individuals to understand that A, you can do taxes on your own, or B, if you hire someone else to do it, you want to understand what they're doing so that you can monitor it. Okay, so here's a statistic to help put my point into perspective. If a tax preparer makes a mistake on your taxes, and that mistake is caught, say 2 to 3 years later, A, that tax preparer is not liable for the mistake, and B, because the government is about 2 to 3 years behind, any mistake that is made that requires you to owe them, that mistake is going to have interest accrued to it at daily compounding rates for that 2 to 3 years that it took them to be able to figure it out. So this is not a doomsday conversation. This is not a fear conversation. This is a conversation about just taking ownership for a process that's way easier than we think it is. Why do we think it's hard? Because the government wants us to do it hard, wants us to think it's challenging. In fact, if you go to, don't do it, but if you went to irs.gov and you read all of the expositions all the way on the front page, it says the IRS tax code is made difficult by design. They're letting you know they're making it hard. Well, why would they do that? Because the harder the tax code is, then the less chance you will master it, and the more the government can take advantage of you by you not understanding how it works. So I said all that to say this. In the next 12 minutes, every single person on this call will know how to do their taxes. Again, owning the lawn example still applies, but if you understand how to do it, you have ownership, whether it's you or a tax professional. And one of the things I've noticed is that when I teach people this, they oftentimes say, oh, well, maybe I will do my own taxes until I do something different, meaning this. Say you hire an accountant. You say, accountant, do my taxes, okay? So you've got some unique situations going on, and they do your taxes based on the unique situations. Well, guess what? You don't have that unique situation next year, but you're still paying them the same amount for what you did last year. And the next year, you don't have a unique situation happening, but you're still paying them the same amount of what you paid the previous year. So what I like to suggest to clients is this. When you have something new and specific going on, hire a professional and let the professional tell you the best way to master it. Then fire them and do it yourself the next year. So as promised, 12 minutes or less, everyone on this call who's never done their taxes before will understand it. Now, somebody's listening to me and they're saying, well, I already do my taxes. So you're not going to give me 100% energy. I still want you to follow what I'm saying because we've already talked about it. We learn through repetition. So those of you that know how to do your taxes and you're already doing it, I still think that you can benefit from this because I have the gifting of being able to take complexities and make them simpler. So those of you who do your own taxes could listen to this 12 minutes and then next year have an easier experience. So this is how you do your taxes. First, I want you to visualize a huge bubble. In other words, what if you were looking at a piece of paper and that piece of paper, you drew a bubble like you were doing a cartoon. And inside of that bubble, you just drew a money sign. Why do I want you to draw a money sign or a dollar sign in that bubble? Because that reflects my visualization of the fact that what goes in this bubble? Everything. The federal government is designed to tax everything. So I don't ask a bunch of questions on what's taxed and what isn't taxed. I simply use the E word, everything. Everything that we do that has any type of income is going to be in this bubble. Now, all we have to do to this bubble is three things. Three things. Man, this is easy. So I've got a bubble. What's in the bubble? Everything. And all I have to do is do three things from this bubble. Just three. Now, these three things that we're about to do from this bubble, I'm going to call those three things subtractions. I am under the impression that everybody on this Zoom knows how to subtract. That's all we have to do for the first part of this 12-minute tax conversation. Subtract. Now, there are three types of subtractions. Big bubble, everything's in it. What do I do next? I make three subtractions. Now, the first type of subtraction is called an exemption. Ooh, that sounds hard. No, it isn't. It's just a subtraction. But what's an exemption? An exemption is just a list of things that you can use to subtract from your taxable income. Why would I subtract from my taxable income? Because the lower my taxable income is, the lower tax I pay. So how do I figure out what the exemptions are? So simple. You look at a list. On your tax form, there's a list of exemptions. You simply look at the list. There's something on that list you did, subtract it. If there isn't something on that list that you didn't do, subtract it. Then don't subtract it. Let me say it again. Look at the list of exemptions. Something on there you did, subtract it. Now, if your complex mind is kicking in, oh, what's on the list? I want to know what's on the list. Let's make this easy first, because we're not going to sever our relationship after this conversation. So you can always bring the specifics back later. All I'm doing is making you understand that the first subtraction is just called an exemption. Look at the list. You did something on the list, subtract it. How easy is this? The second type of subtraction is called an exemption. Now, very simple way to understand an exemption. The way the government looks at it is this. If I've got a taxpayer and they've got a lot of children, if they don't have the income to pay for their children, guess who has to pay? I do. So I want the person with a bunch of kids to be able to have as much of their money as possible. Because the more money they have, then the easier it is for them to handle their children, and I don't have to pay in the form of welfare or prison systems, okay? So, bottom line, the more people you're responsible for, the more you subtract. How simple is that? We're almost finished. So the first subtraction is an exemption. Look at the list. The second exemption is about people. So the first exemption is about, the first subtraction is about the list. The second subtraction is about the people. More people, more subtractions. If you have more subtractions, you pay less tax. You get to keep more of your money to handle your expenses. And by the way, I heard someone say that children are expensive. Expensive is an energy that tightens your shoulders. I would like to suggest that you change that to a lovely price. Oh, it's a lovely price. Why? Because a lovely price feels better than expensive. I don't use that word expensive. I just say, oh, it's a lovely price. Because when it's a lovely price, you don't categorize yourself into being able to afford it or not afford it. You just recognize the price. And if it's what you want, Bob Proctor said the only prerequisite is desire. If you want it, you can have it. So, lovely price. So, we're almost finished. The third subtraction is called a deduction. Now, there are people who say that when you do things to benefit the universe helps you out. In other words, in fact, the guy that the football player that everybody's been spending time and energy on this week, he did a chat, excuse me, he did a tweet, and the tweet said that when you give, the universe sends you back 3 times. Exactly. Why? Because you're helping the universe do what it does. And when you help the universe do what it does, it helps you. Look at the government the same way. When you help the government to do what it does, it rewards you. So if you do charity, if you do volunteer work, if you do something that is helping the government do what they do, they're going to reward you with the third type of subtraction called a deduction. 3 different subtractions. An exemption is about a list. I said that right. An exemption is about a list. Okay, wait a minute. I'm sorry, I confused myself. So the first subtraction is I'm so sorry. Adjusted gross income. The first subtraction is called an adjustment. Please forgive me for making that mistake. The first subtraction is called an adjustment. Look at the list. If there's a list up there that's you have done, you subtract it. I am so sorry. The second subtraction is called an exemption. That's about the people. And the third one is called the deduction. That's about an expense. We're done. We're done. I simply take those 3 subtractions. I take the adjustments based on the list. I take the exemptions based on the people. I take the deductions based on the expenses. And I simply now have what's called a taxable income. Now, watch this. Throughout the year, you are paying the government if you have a job, and if you have a job, you don't have it for long because you're a freedom fighter, they're going to pay into the government system based on the allowances that you put. Now, I used to do a really long speech about what allowances are, but they just changed how allowances are in 2021. So they're being done totally different now. They're done by dollar amount now and not by number of allowances. But the bottom line is you give the government your money based on what comes out of your check. But now, when you file your taxes, how do you file your taxes? You take those 3 subtractions, you get a taxable income, then you pick what tax you owe based on that taxable income, and guess what? The difference between how much tax you owe and how much tax you pay. Let me do it again. The difference between how much tax you owe, how do you know you owe it? Because you just did the 3 subtractions. The 3 subtractions from everything that you put in gives you a taxable income. Figure out what your tax is, which, by the way, all you do is look in the book and just look at what the actual row is. And then you compare that to how much money you paid. Now watch this. If you paid more than you owe, which is how it's designed, if you paid more than what you owe, you get a refund. So everybody's so happy about getting a refund, but let's think about what that means. The refund means you gave the government more of your money, and now they're giving back to you what you gave them. Time out. What if you were walking down the street and somebody robbed you? You just got paid, had all your money in your pocket or your purse. They stole the money, and then a year and a half later, they wrote you a letter and said, "How you doing? I'm the criminal that robbed you. Here's your money back." Nobody would smile if that happened because you got robbed. You're focusing more on being robbed than you are the letter that you got from the criminal. Isn't that the same thing the government is doing? Isn't the government stealing your money during the year and then giving it back to you a year and a half later, and we rejoice, "Oh, I got a refund." Yeah, but you gave them more than you owed throughout the year. Now, how you manage that is a whole different conversation, which we can have, but I just want everybody to know that what I just told you, that's it. That's how you do your taxes. So when you do your tax form, everything that I just said is presented in a much more convoluted way, but it's the same exact issue. Look at your income. Look at the list of adjustments. If you did something on there, subtract. Look at the people you're responsible for. You got some people, then subtract based on how many people. You spent some money that was specific to helping the government do what it does, then you subtract that. Boom, taxable income. You go to the chart, you look at the taxable income, you figure out how much you owe, boom, you're done. You're done. Now, there's some other little specifics, yes, but that's the big picture. And most people don't understand the big picture simply because A, it's made more challenging by the IRS, and B, we hire someone to do it, but we don't even look at what they're doing. Now, having said that, having put that in there and being very looking forward to the questions that are going to come, let me answer the question. So what do we do as traders? Now, we have two choices. When you do deductions, you can either take a standard deduction or you can do your own deductions. If you do your own deductions, that's called itemized deductions. When you do itemized deductions, you use a form called Schedule C. Well, there's a part of Schedule C that says profit and losses from investing. So as a trader, you have two choices. This is choice one. Choice one is on Schedule C, which is part of the 1040 form. You go to the part that says what I just said, and you simply treat your trading income as ordinary income. Choice two, you can use a form called 8949, which is part of something called Schedule D. Schedule D is an advanced 1040 tax form, which allows you to, it's really designed for capital assets. So the only difference between using Schedule C and using Schedule D form 8949 is that if you had capital losses, you could offset them as a deduction on 8949. The impact on your taxes is the same. You either use Schedule C, in which you're going to count it as ordinary income. And by the way, the reason why it's ordinary income and not capital income, or excuse me, capital gains, is because day trading is considered to be less than a year. Therefore, it doesn't apply for capital gains tax. So you're either going to use Schedule C and treat it as ordinary income, or you're going to use Form 8949 on Schedule D, which allows you, if you have any capital losses, to offset them. Okay, let me start with Irva because she's the one that asked this question. Questions, comments, testimonies, Ms. Irva.
Okay, first of all, welcome back, Dr. Bythewood. We missed you.
Thank you.
Okay, my question is about a deduction. Before I retired and I worked for Milwaukee Public Schools, everything that I either did in my classroom or bought things for my classroom or the courses that I took to renew my certifications or to upgrade my practice, those were all deductions that I could take.
Correct.
Now that I'm not in education, but I'm in trading, and I consider the money that I spend in the academy as my tuition.
Correct.
Is it possible for me to deduct that without being in a business?
Yes, because you don't have to have a business to use business expenses. And you proved that because you were in a business when you were taking all of this materials. For example, let's say I have a class today and I use dry erase markers. I can take those dry erase markers and I can deduct them. But let's go back to the original point. When you're helping the government to do what it does, then it's deductible. So they want an educated workforce. So anything that you do in the area of education, you can do it. So now this is important. You asked the question and I answered it. But this is not the forum to find out what's deductible and not deductible. Why? Because the rules change constantly. This is the forum to talk about the big picture rationale. Then you go and you double check, because I do that every year. Every single year, I look at all the deductions to see what's new, what's old, what's changed. So I already know that my answer is accurate. I'm just saying that you always want to do your due diligence because things change. So for example, say somebody gets an answer from me now, and then in 2025, they say, well, Dr. B said, but it changed in 2024. So you always want to make sure that you are accountable. And I simply do this. In the tax form, there's a statement that says, what's new, what's new for this year? And it has all the list of changes and deductions. Or you can Google it, same thing.
Okay, that that definitely answers my question. And I would like to talk about when you first began, you said something that struck me. Before I became involved in a financial experience, I was one of those people that, you know, you just give your taxes to somebody and pray that they do them the right way and you don't have to be audited.
Right.
But with all of the things that I've learned from Ms. Tanya McHale, and now more recently from you, I became very curious about how someone does my taxes. So this learning about finance and being in the financial arena rather than me only in an educational arena student-wise has really benefited me. So thank you.
Excellent. Excellent. I don't know how to mow lawns, but I can look at a lawn and say whether it's mowed correctly or not. We all have that ability in every endeavor. Questions, comments, testimonies. Questions, comments, testimonies about this important topic.
I do have a comment. I just want to thank you for being so willing to simplify things, because I remember years ago when it would be tax time, I would become very anxious and filled with anxiety because I just didn't like doing it. But based upon what you just shared in the 3 categories, you know, the categories that simplify why we're doing each thing that we're doing, you just do, you know, it's just something we have to do, like driving a car and adhering to the laws of the road. So
Exactly.
I appreciate the explanation because it makes me feel like, well, you know, this is just part of what making money is. We have to report and deduct and do all these different things. So I appreciate the simplification. You know, I love to keep things simple.
You are very welcome. Any other questions, comments, and testimonies? Okay, I've got a group of girls that are looking at me because I won't let them in the car until I finish this Zoom. So
tell them all hello and Happy New Year.
I certainly will. So let's pray this week. Pray this week to some closure. Heavenly Father, thank you. Thank you for this conversation. Thank you for this group. Thank you for 2023, as we know we're going to do bigger things this year than we have in the past. And we just thank you so much for allowing us to have such a great mindset and such a great mastermind group. And please continue to bless every single rectangle on this Zoom call. And please allow us to continue to cross our T's, dot our I's, walk in excellence, and recognize that inflation is a normal part of life, and that we can appreciate all these lovely prices, because inflation really means that when we serve the marketplace, we get paid higher and higher. We are thankful, we are appreciative, and we are grateful. Amen.
Amen. Everybody have a
Amen.
Yes,
week.
thank
We'll see
you.
on Friday.
Thank you.
Okay.
All right, everybody.
See you Friday.
You well.
Take care.
You as well.